He had 6 monitors, crypto on one screen, ES on another, also Forex pairs in the middle and another 2 for news feeds. His Discord was blowing up and his watch lists were stacked. He called it diversification. He told himself, this is how pros do it. But every time he clicked in, he hesitated. He second-guessed. He hesitated again. One day, he missed a clean setup on his favorite market, namely Euro USD. Why? Because he was checking a stock alert on SPY. Then he chased it. Then he got emotional. Then he forced revenge. He closed his session down 3R not from bad trades, from divided attention, and that's when it hit him. I'm not trading 10 markets. I'm leaking edge in 10 directions. That moment changed everything. He cut 90% of his watch list. He went all in on one pair. He built rituals, logged micro-reactions, and tracked emotional variance on just one chart. 90 days later, he passed his first prop firm eval, not because he got smarter, but because he got focused. Welcome to Disciplined Trades. We don't chase signals, we rewire traders. And today's truth might sting. If you're juggling 10 markets, you're not diversifying. You're diluting. You're not increasing opportunity. You're scattering your execution energy. But today, we're ending that. Because you're about to learn 15 cognitive shifts that will prove why fewer charts equals more confidence, how focus multiplies execution, and how one setup in one market can outperform your entire buffet. And stick around for shift number 7. It's the exact moment I discovered my attention blind spot and how it almost cost me a funded account. Comment below, how many markets are you watching right now? Drop a number, be honest, let's clean house together. Chapter 1. The Illusion of Spread. More markets equals more opportunity, right? That's what they tell you. That's what it feels like. But here's what they never say. Every additional chart you watch, it taxes your brain. Every new market you track, it adds noise. Focus is a finite resource. And when it's spread across 10 pairs, 3 indices, and 6 crypto coins, you're not expanding edge. You're diluting clarity. There's a name for this. Attentional saturation. A neuroscience principle where attention, when split across too many stimuli, becomes less efficient at processing any of them. Your RAS, your reticular activating system, the filter in your brain that prioritizes signals, can only process one focal objective at a time. The more you feed it, the more it filters randomly. You start seeing patterns that aren't there. You start forcing trades just to justify watching so many charts. And slowly, you move from sniper to scattershot, from operator to observer. A trader we coached was watching 13 tickers daily, missed clean setups because he was flipping between charts, thought he had a strategy problem. He didn't. He had an overwatch problem. We cut him to 2 markets, gave each their own ritual. His win rate jumped 17% in 30 days. Not because he got smarter, because his focus stopped leaking. Action step. Audit your chart tabs. How many are open during your session? Pick 3 max, then cut everything else for 2 weeks. Track, setup clarity, 1 to 10, emotional stability, hesitation, frequency. You'll feel it. The mental silence, the locked-in rhythm. That's not lack of opportunity, that's presence. Chapter 2. Decision fatigue is killing your edge. Ever notice how your first trade of the day feels sharp, but by the 4th or 5th, you hesitate, you fumble, you misclick? That's not just randomness, that's decision fatigue. Every chart you scan, every setup you analyze, every maybe trade you ponder, it all drains mental energy. And when you're watching 10 markets, that drain is exponential. Psychologists call this the ego depletion effect. Your willpower and decision clarity are limited use resources. And if you burn them on low quality maybe trades, you'll have nothing left for the high quality ones. One of our Discord members used to trade 7 markets daily. He kept switching time frames, second-guessing entries. His journal looked like this. Trade 1, solid. Trade 2, decent. Trade 3, hesitated, late. Trade 4, impulse. Trade 5, emotional revenge. Same story every week. until he caught to one market, built one routine. Suddenly, trade 4 never happened because his mind never had to scramble. A study from the National Academy of Sciences showed that parole judges were more likely to deny parole later in the day, not because of the cases, but because they were mentally tired. Same brain, same fatigue. Don't let it happen to you. Action step. Limit your active decision set. One market, one setup, one time frame. Build a routine that reduces daily choices. Same session start, same scan, same checklist. Because real edge isn't in more trades, it's in fewer decisions made with more clarity. Chapter 3. The multitasking tax on execution. You think you're multitasking. You think you're scanning, analyzing, executing across markets like a machine. But your brain is not wired like that. Multitasking is a myth. What you're really doing is task switching, and every switch costs. MIT neuroscientist Earl Miller said it best. Your brain is not designed to do multiple things at once. When you think you're multitasking, you're actually switching attention very rapidly, and every switch degrades performance. Let's break this down in the context of trading. You're watching Euro USD. Suddenly, BTC USD spikes. You check the chart, and your brain resets context. By the time you flip back, you've lost the rhythm of your original setup. You missed the entry. Or worse, you force a poor one just to feel productive. A trader in our live mentorship was juggling 5 markets, kept missing entries, kept entering late, said, I just need to react faster. But the problem wasn't speed, it was context switching. We had him focus on just GBP USD. After 10 sessions, he wasn't faster, he was smoother, because he wasn't resetting his brain every 3 minutes. The American Psychological Association found that task switching reduces productivity by as much as 40%. Now imagine what it does to your trade execution. Action step. Audit your switches. For one session, tally how many times you switch charts, checked another asset mid-trade, jump timeframes. Now run the 5-day experiment. One market, one chart, one routine. Rate your execution on entry timing, mental clarity, post-trade regret. You'll be shocked. The fewer taps you click, the more confidence you'll feel. Because mastery doesn't happen between switches. It happens when your mind locks in. Chapter 4. Your brain wasn't built for 10 feedback loops. Every market has its rhythm, its own tempo, personality, traps. When you trade multiple markets, you're not just switching charts, you're switching feedback loops. SPY breaks down fast. Euro USD floats and fakes. BTC rips violently, then stalls. Each one teaches your brain something different. Each one wires a new reaction. And when you combine them all, you create neural noise. Your brain can't encode what matters. It doesn't know which reaction was right, so it builds nothing consistent. This is called conflicting reinforcement, a concept in behavioral psychology that proves when a stimulus produces inconsistent outcomes, the brain stops forming habits. And that's the real danger. You're not just leaking energy, you're blocking pattern memory. A trader in our forum tracked 12 markets. He journaled meticulously, but every week, his notes contradicted. What worked on gold failed on USD/JPY. What worked on indices broke on crypto. He wasn't getting smarter, he was getting scrambled. Once he focused on one market, his journaling became surgical. He saw entries repeat. He noticed mood patterns. He started to build internal reps because now the feedback was coherent. Action step. Audit your journaling. If you're tracking multiple markets, ask, do my entries behave the same across assets? Am I learning repeatable lessons or just collecting chaos? Pick one market. Run a 30-trade journal. Look for emotional cues, pattern consistency, and execution notes. The clarity you'll get, it won't just improve your trades, it'll rewire your mind. Because consistent feedback is the soil of mastery. And right now, you might be watering weeds. Chapter 5. You can't master what you don't marinate in. There's a myth in trading. That edge comes from exposure, from variety, from seeing more. But mastery isn't built on more exposure. It's built on deep exposure. You don't master a setup from watching it once. You master it by marinating in it, seeing it evolve, faking out, constricting, expanding. You watch its rhythm. You feel its pace. You know when it breathes in and when it snaps. And that depth only comes from focus. I spent 90 days trading just one pair, USD JPY. No distractions, no flip-flopping. I started seeing micro patterns I never noticed before. The 8:30 a.m. news whipsaws. The 10 a.m. fake breaks. The Asian session coils that exploded at Frankfurt Open. I wasn't smarter. I was just present long enough to spot the subtle. That's the real edge. Not flashy indicators. Not the latest YouTube system. But subconscious familiarity born from deep repetition. Neuroscience calls this chunking, the process by which the brain compresses complex data into intuitive chunks, patterns that are instantly recognized without conscious processing. But chunking only happens through repetition within consistent context. Watch 10 different charts, no chunking. Watch one chart every day for 60 days, pattern lock-in. Action step. Pick one setup, one market, one time frame. Commit to 50 trades, track, set up formation behavior, emotional reactions, and market personality. Your goal isn't to trade well, it's to immerse deeply enough to notice nuance, because nuance is where amateurs miss and professionals enter. Chapter 6. Flow state demands focus. You've heard of flow, that state where time slows down, where every move feels intuitive, where execution feels effortless. But here's what most traders don't realize. Flow requires focus, and focus dies in distraction. Flow isn't mystical, it's biological. According to psychologist Mihaly Csikszentmihalyi, flow happens when three things align. Clear goals, immediate feedback, full concentration on a single task. So guess what happens when you're juggling 10 charts? Flow shatters. Your brain doesn't know where to lock in. The feedback becomes delayed. The goals blur across assets. You're trading but not absorbing, clicking but not processing, reacting but not executing. When I was chasing multiple markets, I never hit flow. I had decent trades, sure, but never that zone. Then I went all in on NQ. Same session, same setup, same rhythm. By week 3, I started entering without overthinking, spotting traps early, sitting with stillness mid-trade. That was flow, not hype, just presence. Studies at Harvard have shown that flow increases performance by up to 500%, not from new skills, from fully immersed attention. Your brain literally reorganizes during flow. It blocks irrelevant signals. It reduces activity in the default mode network, the self-talk region. Translation: you stop doubting. You start executing. Action step. Create your flow ritual. One market. One pre-session checklist. No tab switching. 90-minute deep work block. Track. Session intensity 1 to 10. Distraction count and intuition moments. You'll see it, not in profits, but in how you feel mid-trade. Because when focus locks in, the market slows down and you finally start seeing the edge you always had. Chapter 7. The hidden cost of context switching. This was a shift that almost cost me my funded account. It started like any other day. I had a clean setup forming on Euro USD, level was holding, price action was clean, then Bitcoin started spiking. A buddy messaged, BTC breakout looks juicy. I clicked over. 2 minutes turned into 5. By the time I flipped back, my setup was gone. I chased it. I got slipped. I broke my rules. And just like that, down 2.5 R. Not because I misread the chart, but because I left it. That's context switching. And it's more dangerous than people think. Every time you leave one market and check another, your brain must reload. Chart structure, recent price action, emotional context. That reload isn't free. It costs attention. It breaks immersion. Neuroscientists at Stanford found that high multitaskers perform worse in every cognitive task tested because their brains become less effective at filtering irrelevant stimuli. They literally train distraction. So if you're hopping between charts every 5 minutes, you're not gathering edge. You're dismantling your focus pathways. After that Euro USD mistake, I committed to one market for 21 days. Every time I felt the urge to switch, I logged it. By day 10, the urges dropped. By day 15, I was anticipating setups before they even formed. I wasn't smarter. I was just locked in. Action step: run the switching log protocol. Every time you change markets or tabs, jot down the time and reason. Rate your focus after each switch 1 to 10. After a week, you'll see your patterns. And more importantly, you'll feel your clarity come back because your edge isn't hiding in another chart. It's buried under all the ones you keep checking. Chapter 8. Breadth creates blind spots. The more charts you watch, the more patterns you'll see. And that sounds like a good thing until it isn't, because the brain is wired to complete patterns, even when they're not real. This is called apophenia, the tendency to perceive meaningful connections where none exist. In trading, it's deadly. You scan 12 charts, you spot a shape that kind of looks like a flag. You convince yourself it's valid. You take the trade. And 30 minutes later, you're staring at a fake out wondering, what the hell did I just do? Here's why. You weren't reading structure. You were collecting fragments. And fragmented attention creates phantom setups. A trader in our community was losing money on half-baked patterns. He kept finding trades he wanted to see, not trades that were actually there. His mentor cut him to one chart. Suddenly, the false patterns vanished. He wasn't distracted. He wasn't grasping. He was present, and patterns either were there or they weren't. Cognitive psychology shows that high information volume increases confirmation bias. Your brain gets overloaded, and it starts choosing data that supports your emotional state. That's not strategy. That's self-deception. Action step: watch one market for 1 week. Journal every setup you almost took. Then compare them to actual outcome. Ask, was that a real structure, or did I just want it to be? You will see the truth. Your blind spots weren't a flaw. They were a focus leak. And now, you've patched it. Chapter 9. The identity gap between charts. Who are you on EURUSD? A breakout trader? A pullback sniper? And on BTC? A momentum scalper? A VWAP reversion guy? Different markets invite different behaviors, different tempo, different setups, different emotional triggers. And if you don't catch it, you develop identity fragmentation. You become 5 different traders with none of them grounded. This is dangerous because trading isn't just about what you see, it's about how you see yourself. When you shift styles and setups every few hours, you don't just confuse execution, you confuse your psychological anchor. You never feel stable. You never trust your instincts because you've trained inconsistency into your identity. One trader in our mentorship switched between gold, NQ, and crypto. Each one triggered different impulses. He'd be calm on gold, then chase breakouts on BTC, then freeze on NQ. He wasn't undisciplined. He was misaligned. We cut him to just NQ. He resisted for a week. Then the shift happened. His routine stabilized. His entries simplified. His confidence exploded. Because now he had a role, and his mind started playing it well. Behavioral psychology shows that identity-based habits stick deeper than outcome-based goals. When you decide, I am a breakout trader on NQ, your actions begin to align automatically. Action step: define your trader identity. Use this template. I am a X trader on Y market during Z session. Example, I am a pullback trader on NASDAQ during NY Open. Repeat it every morning. Let that identity solidify. Because when your focus aligns with your identity, execution becomes automatic. And that's when consistency begins. Chapter 10. Depth is where discipline lives. Traders think discipline is willpower. That is about grinding, pushing, forcing yourself to follow rules. But true discipline is not effort, it's environment. And nothing builds a better environment for discipline than depth. When you trade one market, one setup, one time window, you're not just reducing decisions, you're crafting mental muscle memory. Your entries tighten, your stops feel cleaner, your patience strengthens. Why? Because repetition builds rhythm, and rhythm is what locks in behavior. I once coached a trader who kept breaking rules, overtrading, chasing. He said, I know my system. I just can't stick to it. Turns out he was trading 6 different assets. Every chart had different tempo, setups, emotional context. He had the right system, just the wrong structure. We collapsed his plan to one strategy on one market, and something wild happened. He didn't need more discipline. He just needed less chaos. In behavioral design, BJ Fogg's research shows that behavior change sticks best when the action is simple, the environment supports the action, the reward is clear. Trading one market delivers all 3. More simple decisions, a tighter environment, and faster feedback. Action step: audit your discipline failures. Don't just ask, why did I break the rule? Ask, what was the context? If the context was scattered, unclear, or overloaded, you didn't fail. Your structure did. So build a new one. One market, one strategy, one session block. Repeat until rhythm forms. Because real discipline lives in the repetition of clarity. Chapter 11. Simplicity amplifies speed. Speed in trading doesn't come from clicking faster. It comes from thinking less, not less intelligently, less reactively. And that speed is a byproduct of simplicity. When you're scanning 10 charts, your brain is juggling variables: trend strength, structure, context, time of day, and correlations. That's cognitive drag. But when you narrow to one market, you start to recognize the now. You don't think, you respond. One trader I mentored moved from a 6-chart scan to 1 pair. At first, he feared he'd miss out, but within 2 weeks, his execution time improved dramatically. Why? Because setup recognition became instinctual. His notes literally said, "It feels like I'm predicting the move now, not reacting to it." That's the hidden gift of simplicity. The Hick-Hyman law in psychology shows that decision time increases with the number of choices. Fewer options equals faster reaction time. In high-stakes environments like aviation or emergency rooms, simplifying inputs is standard protocol. Your trading desk should be no different. Action step: reduce your pre-session scan to one asset. Build a 3-step setup checklist. Make each step binary, yes or no. Then track time to execute, time between signal and entry, post-trade clarity. The decision window narrows, the action window widens, and speed, born of simplicity, becomes your new default. More markets, more emotional whiplash. Each market has its own tempo, its own rhythm, its own emotional signature. Gold whips, Nasdaq floats, crypto surges, then vanishes. Every shift between them is a shift in emotional expectation. And if you're not careful, that creates emotional whiplash. You trade your USD with calm logic, then flip to BTC USD and feel adrenaline spike. You write a slow structure on ES, then overreact to a fast NQ move. It's not about skill, it's about emotional mismatch. You're bringing the mindset of one market into the context of another, and it wrecks you. A student in our training room kept losing trades after switching from Forex to crypto midday. His stop placement was always off. His pacing was always off. Why? Because his emotional tempo was calibrated to one market and couldn't adjust fast enough. So we stripped him back. One asset, one structure, one speed. Suddenly, entries aligned, stops respected rhythm, losses shrank, confidence grew. Science. Neuroscience shows that emotional regulation is context sensitive. Your brain calibrates expectations based on recent stimulus patterns. If you jump between asset types too quickly, you disrupt emotional continuity, and that's when you lose touch with instinct. Action step: map your emotional tempo. Review your last 10 trades across different assets. For each note, which market traded, what emotion came up during the trade, for example, calm, anxious, or rushed, as well as your stability rating 1 to 10. Identify your chaotic asset. Which market consistently triggers emotional spikes or instability? Simplify. Drop that asset for now. Trade one market, one structure, and one speed. Track alignment. Are entries sharper? Stops cleaner? Journal confidence levels after each session. Reintroduce only when stable. Once emotional tempo stabilizes, consider adding another market. but do it slowly and mindfully. Because trading is emotional warfare and every market you trade as a new battlefield. Simplify the terrain, master one battlefield first, then expand. With control, with composure, with a mind that doesn't whiplash on every tick. Chapter 13. Correlation is not confirmation. Just because two markets move together doesn't mean they speak the same language. Traders love to cross-validate. If Euro USD and DXY align, it's stronger. If SPY and NQ agree, I'll enter. But here's the trap. You're outsourcing conviction. Instead of trusting the chart in front of you, you're waiting for a backup singer to harmonize. This creates hesitation, confusion, conflict, and worst of all, false security. Because correlation doesn't mean causation. It doesn't mean timing. It doesn't mean context. It just means similar behavior for now. A trader I worked with kept getting shaken out of good GBP USD trades because DXY didn't confirm the move. We removed the DXY overlay. Suddenly, he was entering earlier, holding longer. His win rate jumped. His stress dropped. Why? Because now, his decisions were rooted in one structure. Behavioral economics warns of redundant signal bias, the brain's tendency to overvalue supporting information even when it has no predictive value. More signals equals more comfort, but not more clarity. Action step. Cut your confirmation crutches. Pick one market, one structure, one time frame. Build trust by repetition, not correlation. Because confirmation isn't found in other charts, it's found in your own conviction, not markets. Label each: calm, tense, urgent, fast setup, or slow formation, felt aligned or out of sync. Now pick the market that matched your ideal tempo. Build your week around it. Because consistency doesn't come from doing more. It comes from emotional stability. And emotional stability starts with pacing that fits your nervous system. Chapter 14. Setup selectivity sharpens over time. When you watch 10 charts, every half-baked setup starts to look tempting because your brain is tired, because you want action, because something looks close. But when you stay locked into one market, something shifts. Your standards rise. You don't chase, you don't guess, you wait. And that wait, that edge in patience, it's not discipline. It's exposure-based refinement. Your brain starts filtering better. Your reticular activating system tunes tighter. Instead of, maybe this is the one, it becomes, that's not it. A trader we worked with always entered too early. He spot a level, jumped the gun, and get stopped, right before the real move. We cut his watch list to just crude oil. Within 14 days, his entries got cleaner. Why? Because he saw the same setup evolve over and over. His selectivity became second nature. Neuroscience calls this pattern honing. Repeated exposure to consistent stimuli sharpens recognition and strengthens inhibitory control, your brain's brake pedal. So setup patience isn't just willpower, it's cognitive optimization. Action step. Pick one A+ setup, one market, one session. Watch only that for 30 days. Rate each potential setup before entry. 1 to 3 equals low probability. 4 to 6 equals medium. And 7 to 10 equals A+ only. You'll start passing on the 5s, you'll wait for the 9s, and that's when your win rate spikes not from magic, but from refined sight. Chapter 15. One market, infinite mastery. There's a myth in trading that sticking to one market means you'll stagnate, that you'll stop growing, that you'll miss the real moves happening elsewhere. But that's not true. Because in one market, the depth is infinite. Every month brings new behavior. Every session brings new tests. Every structure brings new nuance. You don't master a market by memorizing patterns. You master it by growing with it. A trader in our community has been trading only GBP JPY for 2 years. No FOMO, no chasing the hot pairs. His edge? Reflex level execution. He knows when volume thins, when liquidity grabs hit, when certain candle prints mean trap versus trend. Not because he's psychic, but because he's seen it all. He's grown with the market, and now the market speaks to him. The brain is plastic. It evolves based on stimulus repetition and complexity. By staying in one structured domain, your brain gets the reps and the depth required to form true mastery loops. This isn't narrowing, it's refining. Action step. Commit to 90 days on one market. Journal not just trades, but insights. What's shifting this month? Where do traps repeat? What surprised me today? You'll realize the market didn't get easier. You got sharper. An edge didn't come from seeing more. It came from seeing deeper. Chapter 16. Focus builds an internal market clock. When you lock into one market for months, something strange happens. You start to feel time. You start to know the rhythm. You sense when volume dips. You anticipate where liquidity hides. You know the hours that fake and the minutes that explode. It's not a sixth sense. It's an internalized clock. One trader in our advanced program traded only NASDAQ futures for 6 months. He didn't just learn setups, he learned timing. He said things like, watch for the 10:05 wick trap. Don't touch the open unless we break by 9:37. It sounded like magic. It wasn't. It was calibrated memory. In cognitive neuroscience, this is called temporal patterning. The brain develops time-based expectations from repeated exposure. It's how athletes read game flow, how musicians anticipate the drop, how surgeons time precision. In trading, that translates to better patience, cleaner entries, and faster exits. Action step. Mark time anchors in your next 20 trades. Time of day, session transitions, volatility spikes. Then review for rhythms. What times consistently trap? When do clean moves appear? What time kills your clarity? Your edge isn't just price-based, it's time-based. And when your internal clock syncs with the market, execution becomes flow. Chapter 17. Your nervous system can only handle so much risk. Every new market you track is a new exposure to uncertainty, a new source of stimulation, a new trigger point for anxiety, overconfidence, or fear. And your nervous system, it wasn't built for 10 streams of volatility at once. I once worked with a trader who monitored crypto, forex, and indices at the same time. He journaled every trade, tracked every metric, but by noon, he was mentally fried. Why? Because risk isn't just financial, it's neurochemical. Every open position spikes cortisol. Every missed move sparks dopamine. Every red candle triggers fight or flight. Now multiply that by 5 assets. You're not trading. You're overstimulating. Neuroscience confirms that high-frequency stress exposure reduces executive function. This means poorer judgment, shorter temper, and more impulsive clicks. The brain literally prioritizes threat management over strategy. Action step. Audit your nervous system load. How many assets do you track? How many positions open at once? When does fatigue set in? Now cut it in half. Track emotional stability, impulse frequency, session energy level. You'll feel the difference because risk tolerance isn't just math, it's physiology. And your body already knows what your P&L won't say. Less noise equals more edge. Chapter 18. Clarity compounds. Here's the hidden compounding effect traders ignore. Clarity. Clarity isn't just mental, it's operational, it's strategic, it's profitable. And nothing compounds clarity like consistency of input. When you trade the same chart every day, your brain doesn't just see patterns, it sees meta patterns, the behavior around behavior, the evolution of traps, the exceptions to your rules that prove the edge. And that's wisdom. One prop trader we worked with had a 72% win rate over a year. Not because his system changed, but because his clarity compounded. He noticed how his setup faked out in specific news windows. He adjusted, he filtered, not overnight. Cognitive science refers to this as heuristic refinement. Through repetition, the brain trims the fat, reduces noise, sharpens filters, and speeds recall. You become faster and more accurate at the same time. Action step. Do a clarity audit. Look at your last 20 trades on one market. Where was your vision sharp? Where did confusion creep in? Then build a clarity tracker. Set up clarity score 1 to 10. Execution clarity score. Post-trade narrative clarity. Watch the scores over time. Because just like capital, clarity compounds. And the sharper your lens, the more your trades cut clean. Chapter 19. Fewer charts, sharper journals. Journaling is one of the most powerful trading tools. But here's the part no one tells you. The more markets you trade, the less accurate your journaling becomes. You dilute the signal. You blur the insights. You might write, felt FOMO today. But was it because of BTC spike or gold fake out or NQ's reversal? You don't know because your feedback loop is noisy. Now imagine this. One market, one setup, one session. Suddenly, your journal is razor sharp. You start noticing exact emotional triggers, subtle structure shifts, and patterns in your entries. I had a trader log 3 assets daily for a month. The no's were vague, inconsistent. We cut him to 1 asset the next month. His journaling went from missed a good trade to skip the 15-minute pullback because I fear late entry pattern repeats after 3 green closes. See the difference? It's clarity in data, which drives clarity in growth. Cognitive load theory proves that access information reduces processing quality. With fewer variables, your brain encodes deeper, and deeper encoding means stronger learning loops. Action step. Shrink your tracking. Pick 1 asset. Track. Emotion at entry. Set up conviction 1 to 10 and thought post-trade. Do this for 20 trades, then review. Repeated thoughts, emotional cycles, set up alignment. That's where growth lives, not in more trades, in more accurate feedback. Chapter 20. Signal versus noise is a skill. Traders don't fail from lack of information. They fail from too much. One setup fires on gold, another bounces on NQ, BTC looks like it's coiling, your brain floods, and suddenly you're not trading. You're choosing, guessing, overloading. Here's what focus gives you. Signal clarity. You learn to separate. Setup from seduction, trigger from temptation, real edge from reactive hope. One trader I coached used to flip between 6 charts every morning. He'd take the first thing that looked decent, but when we locked him into just 1 chart and 1 setup, he messaged me 2 weeks later. I thought I was missing out. Turns out I was just finally seeing clearly. That's the skill. Filtering. In cognitive neuroscience, this is attentional gating, the brain's way of amplifying relevant stimuli and suppressing distraction. Repetition tightens the gate. Scattered inputs blow it wide open. Action step. Every morning, label each potential setup. S equals signal. N equals noise. Then explain why. What defines that signal? What pattern makes it clean? What emotion tries to override it? After 20 sessions, review. Did your filters sharpen? Did your entries tighten? Did your journal calm down? That's not luck. That's skill. And skill is trained through focused filtration. Chapter 21. Market familiarity builds intuition, not rules. You can't trade the market like a robot because markets aren't mechanical. They're behavioral. And when you focus on one market long enough, you stop trading the rules. You start trading the feel. This isn't about guessing. It's about embedded intuition. You feel the shifts before the candle forms, the hesitation in volume before a fake, the aggression behind the breakout. It's not magic. It's memory. A scalper I coached used to obsess over strict rule-based systems until he simplified into just one futures chart. Over time, he stopped needing confirmation. He'd say, I don't know why I exited there. It just felt wrong. And 9 times out of 10, he was right. Psychologists call this adaptive expertise. After enough reps, the brain blends pattern recognition with emotional feedback. This creates real-time calibration, not from theory, from feel. Action step. Don't chase intuition. Build it. One market, one structure, one feedback loop, and log every time you felt something off. Track. What triggered it? Was it valid? What did you learn? You'll see a pattern, and eventually, that pattern becomes instinct. Chapter 22. Complexity breeds hesitation. The more variables you track, the more likely you are to freeze. Should I Wait for the news? Should I check that other chart? What if this move is fake? Hesitation doesn't come from fear. It comes from overload. And the antidote? Focus. When your world shrinks to one market, one setup, there's less to question, less to filter, less to weigh. Your decisions become faster. I once coached a trader who froze every time price approached his zone. He'd missed the entry, then chased the second move. We simplified his plan down to one rule. If A and B, then enter on C. And instantly he stopped freezing. Why? Because clarity creates courage. Cognitive science shows that choice paralysis occurs when options exceed processing bandwidth. This is the core of the paradox of choice. More freedom equals more stress. Trading clarity comes not from more data, but from fewer decisions. Action step. Simplify your setup. Write it out as a conditional. If A and B, then enter on C. Now trade only that for 20 trades. Track. Did I hesitate? If so, why? What could be simplified? Because hesitation kills, and the weapon against it? Clarity through constraint. Chapter 23. Focus kills FOMO at the root. You don't feel FOMO because you miss a trade. You feel FOMO because you believe something better is happening elsewhere. And when your eyes are on 5 charts, that belief gets stronger. But when you commit to one chart, one setup, there's nothing to compare, nothing to regret, just presence. And presence equals power. A trader I work with always chased breakout entries on BTC after missing moves on ETH. We cut him to one chart. After 2 weeks, he messaged, "I don't feel the urge to chase anymore because I'm not watching what I'm missing." That's the trick. FOMO thrives on comparison. Kill the comparisons, and you starve the urge. Psychologists define FOMO as a product of social comparison theory. We feel anxious when we perceive others gaining more than us. In markets, that means more charts equals more comparison, equals more emotional distortion. Action step. Stop tracking missed trades on other assets. Track only your chosen asset. Every session, ask, did I follow process? Did I stay present? Did I learn? Because growth comes not from what you watch, but from what you witness fully. Kill FOMO at the root with focus. Chapter 24. Mastery is repetition, not range. You don't become a sniper by spraying bullets. You become a sniper by drilling the same shot until it's reflex. Trading is no different. But most traders chase range, more markets, more indicators, more patterns, because it feels like growth. But real growth? That's repetition. That's depth over breadth. One of our highest performing traders traded the same breakout setup on Euro USD for 18 months. Same hours, same structure, same trigger. And his edge didn't decay. It deepened. He began seeing micro nuances in liquidity grabs, behavior during major news weeks, and subtle wicks that signal fake outs. Behavioral psychology calls this deliberate practice, focused, repeated action with feedback and refinement. It's not just repetition. It's refined repetition. That's what makes mastery. Action step. Audit your last 30 trades. How many were the same setup? How often did you adjust the rules? How deep is your understanding? 1. Very shallow. 10. Virtually automatic. Now commit. One setup, one market for 30 days. Track nuance. Track feel. Track how your decisions evolve. Because edge isn't found in more tools. It's forged in repetition. Chapter 25. Why pros trade boring. You know what the best traders have in common? They're boring as hell. Same chart, same setup, same process, day after day. And while the crowd jumps from one hype asset to the next, they're quietly stacking consistent wins. Because boredom is a birthplace of brilliance. A top funded trader told me, I've made over $2 million trading the same 5-minute pattern on US 30. People think it's boring. I think it's freedom. He doesn't need the excitement because he gets his dopamine from execution, not chaos. Neuroscience shows that deep focus dulls external novelty seeking. This is called dopamine recalibration. when the brain resets its pleasure baseline from stimulation to mastery. It's how musicians practice skills for years, how athletes drill the same move thousands of times, how traders lock into flow. Action step: embrace boredom. Track: how often do you crave switching charts? Where do you seek stimulation in your trades? What does your process anchor you to? Now flip the frame. Every boring day is a chance to deepen mastery. And when trading becomes a craft, not a thrill, that's when it gets fun. The climax: the day I finally let go of more. I still remember it. The moment I deleted the last market from my watch list. Not because it was unprofitable, but because it was unnecessary. I was sitting in front of 6 monitors, charts blinking, alerts firing, P&L fluctuating like a heartbeat, but I couldn't see clearly, couldn't think clearly. So I stood up, closed 5 screens, left just one chart open, and stared. Something strange happened. My breathing slowed, my eyes relaxed, my brain focused. For the first time, I wasn't reacting, I was watching. That session, one trade, precise, clean, controlled. It wasn't my biggest win, but it was the first time trading felt like peace, because focus isn't the constraint, it's freedom. Freedom from noise, doubt, decision fatigue, emotional crossfire. That day, I learned you don't master trading by doing more. You master it by needing less. And once you taste that, you never go back. Let this video be your turning point. Let this be the day you choose. Less noise, more signal, less clutter, more clarity, less everything except edge. You made it through 25 brutal truths, each one a blade cutting through the clutter traders drown in. But don't just nod and agree. Don't just highlight your favorite shift. Pick one, apply it, live it. Because trading psychology isn't about what you know, it's about what you do under pressure. So here's our challenge. Commit to one market for the next 30 days. Journal it. Track your emotional data. Watch how your clarity evolves. And if you're ready to keep rewiring your trading brain, subscribe. We go deeper than tactics. Drop a comment. I'm committing to one chart. Let the community know. Anchor yourself publicly, like this if something snapped into place for you. Share this with that trader friend chasing 5 setups across 10 markets. They need it more than they know. Because this isn't just about discipline, it's about direction. And when you trade with focus, you finally trade free.